Joining me today on Decent Cities is the founder of Ace Host and Assorted Design and general entrepreneur and someone who's been in the crypto space for a number of years, Russ Bruno. Thanks for joining me.
Pleasure to see you and pleasure to meet you.
So you're located in Tampa. You've been based in Tampa for quite a while. And one of the things that we talked about is you're actually starting to stand up some mining, crypto-specific mining operations here. Continuing some of the operations you have up in DC. Let's get a quick history of the company and sort of your evolution from regular hosting to crypto-specific hosting, and then we'll dig in a little bit more to what crypto-specific hosting is.
Absolutely. So my career started in 1998, where we were first founded our first data center back in 1998. Highly available streaming technologies where we started, and sold the first data center in the mid-2000s. During that course of that time, met some technologists, support guys that worked from us that started to dabble in BTC and crypto mining right from the beginning. We had power and space back then in our data center. We invested some small money and told the tech guys, show us what that means, and sort of took off from there and kind of started to evolve. One of our customers was based in China and put us in touch with some very unique relationships that kind of catapulted us right from the get-go.
And those are crypto-specific relationships.
Yeah, they were hosting other streaming technologies and storage-based components, and they were getting into crypto heavily. I would say 2012 or so, 2013. And so we just sort of kept it in the back burner, kind of really didn't understand what it really meant, or at least I didn't. I had a couple of successful mentors that were working with me at the time. Both have gone on to other things. One of them's retired, and just said, we believe in this. So we, about 5 or 6 years ago, using our traditional data center, kind of started gearing up, taking on the ASIC miners, the original S9s, we called them, put a bunch of those up, realized that it took on very specific technologies within the data center based on airflow and many other things we could talk about. So we went ahead and we went to Iceland with a group and put 2,000 miners up there and had great success. And because of the volatility of BTC at the time, we ran them as long as we could. And then we started the decommissioning. We had really inexpensive power, a really good relationship. We took a trunket of those machines, moved them to a facility that we had here in Tampa with a lot of power, and ran them as long as we could until newer technologies, newer machines, faster hashing rate machines came available on the market. And during that time, and it was actually November of 17, I remember pretty vividly, we started to double down and really go heavy in Ethereum, start building out our GPU and Ethereum rigs.
All right, a couple things I want to dig into there. So going back, you said, your first dabbles were in 13, 14. You were obviously your work at that point. You're doing a standard data center. You're hosting websites and that sort of thing, or maybe some corporate functionality. I don't think that was even sort of pre-cloud. How did you feel about crypto? Did it feel like it was something that was just out there, or did you feel like it was something that would have a utility that was just an emerging utility? Where did it sort of play in your head at that point?
I was more worried about the security risks because we've always had a lot of large companies from Fox News, Samsung, Akamai. We hosted a lot of those groups in our data centers. And we then also had a lot of the locally based big companies as well that would bring their full rack of servers to one server, full rack, multiple racks. So we actually... I made it a point to put it in a closed, caged area, which we were building these mining machines and trying to get them to work based on equipment that we had, and had a lot of failed experiences before we started buying machines from Bitmain. But my biggest security piece was the security piece, not knowing what it would do to the network, not knowing what it would do to just intermittent traffic. And then realized once we started putting these machines online and creating their own network for themselves and separated from our own data center within our data center, we never really had major concerns. My guys really segmented IP space and internet space. We brought in internet lines. We kind of went above and beyond kind of the protocols, but there was no roadmap. And so everything that we were told, there was no wiki for it. There was no anyone to really talk to. And really the technologists, the guys and my support guys were mining from their home and their garage. And it was just a unique situation, but it was really more of a security thing that I was most concerned with from the beginning.
And you mentioned making some mistakes and the different dynamics. Can you sort of, what are the variables that go into that? What are the levers you were sort of playing with to try to get the right mix for mining? And you mentioned, going to Iceland because of the power there. How's sort of the power landscape for mining different than standard hosting?
Just right off the bat, inside a data center that we had a tremendous amount of floor space that we were cooling for our regular customers. But at the time, we didn't understand the airflow patterns. There were some things that we read about and spoke and saw some facilities up. We went up to Vancouver and saw the facility. So it was getting the airflow right for our normal traditional data center. You have the UPS systems, the cooling and the air hot and cold aisles. So we were using a lot of that utility to cool down and use from the miners. And the miners can literally run with more of exhaust, right? You need to get positive airflow in and sucking out the exhaust. And so we made our own contraptions within the roof to kind of exhaust out the hot air and creating the patterns. And I don't profess that I'm a major support technical person, but I understand enough between sales and marketing and the support guys that understand and kind of simplify things. And so simple laws of physics and kind of inside the data center was more airflow driven. And we still have those issues today. But at the end of the day, when you have a lot of power and a lot of floor space, and if you can put a mixtured blend together, I believe that there's a way to make it work. A lot of the other data center groups that I've spoken to and currently speak with, they're dead set against any sort of mining. But mining also has changed dramatically because it's a very broad spectrum from back in the day when you had a traditional just ASIC miner versus now the GPU miner, which can be in a server case with cards. We've been able to figure out the dynamics within our data center or segmenting things off so we're not affecting our normal base customers. And so back in the day, we kind of just put all these machines in one place all together, and that was catastrophic. We call them crack units. The AC units were overworking to cool down the room, and that was a big mistake and a bigger power bill than we needed to. That was really mistake number one. Number two, going to Iceland, we just knew that the kilowatt hour pricing was just so dramatically cheaper at the time, still is, but finding space and power is such a premium now because everyone's now trying to mine and put machines up. And so we know that Florida isn't as ideal just from the humidity for the machines and the cost and all these things, but it's go time. And so we've been telling people, listen, we have floor space, we have power. Why not utilize it in some manner if we can that makes sense and come up with some sort of hybrid? And we're still perfecting some of that, but mining also comes in different ways. Chia Network, for example, is a storage-based way to mine, which is using server-based and storage arrays, which uses the power, but the cooling is very similar to just we're using Dell hardware for our storage arrays, and that's a form of mining. Chia Coin, Filecoin. We've got some other ones like the validation networks that use just high processing power within those servers. Those are considered in my world a form of mining. They might not be mining ETH or BTC, but some of our other rigs that we use, we'll call them rigs, it's a form of mining, however you want to spin it.
You mentioned that some of your tech folks were mining themselves. You have the space, you'll have sort of, boots on the ground understanding of what the rewards are. So then when did you dip into the company itself doing some of the mining? And then I guess, I'm assuming that a lot of that probably opened some avenues for folks who wanted to get into it, even just from a straight capital investment standpoint, that might have come to you. So kind of moving out of just the exact hosting, how did the actual mining or partner mining evolve?
Yeah, that's a great question. We were in transition from the last data center that we had sold in Tampa and then the one in Charlotte that was traditional hosting. I was in a non-compete for a couple of years. And so I had an opportunity that I could go into the mining aspects. So what was interesting was because of those pieces, it allowed me to have a lot of opportunity and time to focus on mining and mining space. We did some work in the previous building, and my previous partner, we did a lot of work with the guys at Block Spaces when they started. So they're obviously, the group, the blockchain developer group in Tampa. They rented the first space when they launched in our building. And so I learned from their developers and some of the things that they were doing on the blockchain, but we were actually truly mining. What interesting was is that at that time, that current business partner was retiring. And I had another business partner that wanted to get into the space. And he was actually watching American Greed, the Silk Road segment. I don't know if you've seen it. A lot of people have. It talks about why and how cryptocurrency or Bitcoin was used for the underweb. We understood the underweb for a long time because the type of data center that we were, and again, I'm not ashamed to say it, we started as originally an adult host that learned streaming technology. And because we knew the patterns of traffic and the things that we had to block on our network, especially when we went more corporate, we understood the dark web, the underweb of IP space, which kind of led us into crypto and how that was being used. And so my business partner was watching that show. He called me on a Saturday. He goes, "Hey, I understand that you're working off of Gandhi at your old data center. Would you give me a tour of what you're doing? I'd like to double down and I'd like to invest." And so he wasn't involved in crypto at the time, but it was a kind of a perfect storm. One partner was retiring. They all knew each other. One was younger in nature. And so we started to figure out what was going to be our next steps. We went heavy. We took a building downtown. We put just under $2 million in power to put up about 3.5 megawatt of power. And at that time, we were just installing the Iceland deal, another set of equipment in Atlanta, and realized we had a building that we owned and we needed to create more of our think tank / lab is how we thought about it. And we never looked back. But we made the Tampa facility very heavy on GPU / mining for Ethereum. We have a technology partner in Atlanta. I'll use their name because they're a great group called Performative. They were clients of ours. The head of sales there used to work with us before we sold to Hostway. He had a technology group and 7 technical guys, and all they were doing with GPU mining, all we were doing was the ASIC Bitcoin mining up in Iceland. And so when we got together, they said, "We can build all these rigs for you. We'll host them in our data center up here in a private room." And so we combined forces. They were competitors, and we kind of combined forces. We spent about $500,000 to get the GPU graphic cards at the time, the 1060 cards. Back then, those cards were $300-400, and Ethereum was $100, $90 to mine. And so we went heavy. And so at the same time they were hosting that, we started setting up our facility down here. That was in 17/18. And we sort of realized at that time when we saw the payouts and the systems in place. At the time, even 3 or 4 years ago, the automation wasn't in place to really go into a dashboard and see the payouts. We actually created our own interface between the machines, the payout, the power cost, and that's what started this on a bigger scale, using another data center partner. It wasn't all on our own by any stretch, but we invested just under $2.5, $3 million, I would call, between power, machinery, machines, tech support, and it was a bumpy road, very, very, very bumpy road to go that crazy. Our business partner is entrepreneur as well in a lot of different spaces, not in technology, and just saw something and said to me, I think this is going to be a generational thing. And he was spot on. He was spot on.
So, as you look at your internal capital allocation, then with, different coins have gone up and gone down, and you've been through a couple of those cycles now, there's some point in time where the math says buy as many machines as you can get, and there's some point where it says let's find as many corporations to rent those. So I guess one problem you run into is divergent use of the technology, right? So you can't just repurpose the GPU to host a corporate client. But one of the sort of levers you could have in there is how you leverage those GPUs between leasing them or running them yourself. And so it's somewhere in the middle of that is probably partnerships. So can you kind of talk about how you mentally break down leasing them, running them yourself, or finding unique partnerships that may be an extra layer of value on top of it?
Yeah, sure can. Backtracking real quickly, during pre-COVID, Ethereum was, you can look at the dates, was less than profitable to put up a machine. There was some points that we were running these machines at a loss because it wasn't covering the power. And one of the things that we did differently than most, we never until, I would say 6 months ago, cashed out on any of our cryptocurrency from the beginning all the way through. We held. It was a good venture, but we've gone from $500,000 to $1 million to $8 million to 5. I mean, it was been such a windy road. And I did take on my money and investor money between myself and one other guy. We got a little bit antsy with our support guys that said, hey, keep on running. But our power bill was still, $10, $15, $20,000 a month losses that pre-COVID, we made a decision that we were going to give it a time frame. And I would say like November pre-COVID or October, I would say pre-COVID, before February, March. That's what I call pre-COVID. We were just not sure where this was truly headed. We had a big facility, power, paid, this and that. And so it didn't dawn on me until literally March of 2020 when a customer called and said, hey, will you let me put a couple of machines in your facility? And I said, sure. I said, I haven't done that before, but I've done that for our own stuff. And I've also done it with our data center stuff. But we had at the time only the one facility, which was 203 Marion Street, which was the mining facility. We didn't have our other traditional data center. We had already sold everything out over the last 3 years. And so there was an opportunity that came across to me through a data center that we had sold in Tampa, 412 East Madison, where we were asked to reclimate the data center, which means take everything out, sell it, do whatever. A big company, national company that was in there decided to move. And so when I went in there pulling all the stuff out, I saw raised flooring, cooling, fire suppression, UPS. I said, wonder if this is time to go heavy into hosting and take some stress off of. We wanted to create another. My non-compete was up. We thought we could do it, and so we took on the space and the rent. And instead of reducing our exposure, we went heavier. We reshifted our 203 Marion facility and started taking on some customers that had some GPU rigs, onesie twosie deals.
Right.
no profit share, just pay for colo space, you pay for power plus, you manage it. And so that kind of started it in March of 20. And then the one guy put 4, 6, 10. All of a sudden, there's 50 machines from a customer.
And
And
just sorry, but
yeah,
what's if the operations are break even for you, what's their motivation for coming into essentially the same cost basis plus? If you're breaking even on, unless I guess maybe they were mining different coins or but if they're paying power plus and hosting and they were only break even when you didn't have those additional profit layers built in, what do you feel like was their motivation to come in?
I'll tell you honestly, we're all crazy. I mean that because we all take a lot of risks. I say that in all respect to my customer and ourselves.
Yeah.
We're watching the trends, and one of our guys, our support guys, literally said, "Russ, this is the time to keep all of our machines running on the older technology, on the 1060 cards." That meant the 3060s, 3070s, and not 80s and 90s. All these other cards were coming in the future, but we had no debt on the building, no debt on our equipment. We can afford the loss through our other entity. We just figured, we're creating this digital coin. We've come this far. And the customer that I had, I've known him for a long time. He has another successful internet business. He's a domainer. And he said, listen, I know this isn't going to make you a lot of money or me, but I don't have anywhere to put him. My wife doesn't want him in my garage anymore. Can you do me a favor? And I said, listen, you got to cover some floor space. You got to cover my power. I don't want to get into the liability of your equipment. And that was me and my partner dead set saying we weren't going to take anyone's equipment into the facility, the mining facility. And that changed really quick. I took over the 412 data center. I reestablished ASOS.com. ASOS.com was a brand that we had for years that was really on the shelf. It was a virtual hosting company. And we just put it up online, but it had great SEO presence and a lot of aging on the domain. And I knew that whatever I put up there, I would get some filtered organic traffic. We're an SEO, an old school SEO company by trade and kind of understand that. And so I started getting leads coming in. I just put some simple pages up that said, mining host, Tampa, mining host, Florida, simple stuff. And then the leads started to come. We then got a call from another facility, a mining facility that was closing that had equipment and gave it to us, another 100 machines. And so we started putting those machines up and said, okay, let's see what we can do. And wasn't quite making money. There was everything kept on a perfect storm. The pandemic really scared everyone. But we were in the internet space. So then we're getting calls for data storage and this and that. And so the pandemic in a positive way really helped catapult our businesses both on traditional hosting and crypto. It gave people a chance to think differently. But because of streaming technology, Zoom, just like this, I'd been in that space for so long and believing in technology. I said, we're onto something. And the 2020 year was a less than profitable year for the ASOS division, but officially didn't relaunch itself until June after we put the new data center up in line and reshifted 2003 Marion. Does that make sense?
Yeah, it does. And looking
Yeah.
back, all the math now is great, right? Because even though you were break even or slightly losing back then, the appreciation in all of the coins have made that a fantastic decision to stay put and keep going and to actually
Yeah.
increase it.
Yeah. And I'll tell you the turning point. Getting into 2021 and 2021, I still was unclear in January of this year what our path was going to be for our crypto, other than the self mining. We as a team, and looking back even from January to now, I wish I could have gotten cards for half of what they are now. I could have gotten the ASIC miners for a third in some respects. I should have taken another $500,000 or something and doubled, triple down again. We didn't. We just stayed true to whatever we have is going to pay our core staff, mine. And then May came and really changed things for us because some regulations, Bitstamp had some things, Coinbase at some time frame went public, changed some the usage of holding too much coin with a dormant account. There were some things that have transpired. And so we decided to cash in some of our coin, which I'm glad that we did. We paid back the investor, myself, gave bonuses to the staff, and said, hey guys, here you go. Now the game started. We're playing with 100% the house's money. We cleared the decks. And since May of this year till now, it has been an absolute bigger rocket ship than I could ever expect. I went to a mining show in Miami. I remember back in the day when I first went to trade shows in 98, 99 for hosting trade shows, there were 20, 30 booths. It felt the same way when I went to the mining show in June. Very small, maybe 100 booths, 80. Started talking to people at all the booths, talking to competitors, talking to distributors, manufacturers. They were all there in one room. And I said, listen, I have a data center and I have a mining facility. Do you want to do a deal? One of those guys bit and said, as soon as the next generation machines come, I think I sent you a video of that last week. He said, I will, between June through the end of the year, I want to hold the space and the deposit. I said, I can't do that. But I'm willing to do is I will move stuff out if you come through with the deal. And he came through. He sent us 300 miners. And when it's one of the biggest players in the space, sent us 300 miners. Doesn't seem like much, but will really put us in a really good position. Colo, Power Plus, partnership deal. The mechanics of that deal are similar, what we were touching upon, where we're part of some of the rev share. So we are probably receiving anywhere between 50 and 80 leads a week for people wanting to put their machines up. Self miners, corporational miners, from 1 to 2 to 50, to a group in China that wants to send 3,000 miners. It's absurd, which I've never seen this kind of growth. And I can't obviously service them all. One, my power isn't in line with other parts of the country. I am in Florida. I'm limited what I can do. But I will say that I've saw this utility change, whereas a data center used to be bandwidth being the utility, which was hard to come by. Now the utility that's harder to come by is power and understanding, moving fast and quickly once you have a machine and not losing the time value of money, because we've got people haggling over a couple of cents here and there. Yeah, you can make more profitability in some other markets, but I can take you now. And so we're gonna be in the same spot as some of the bigger players because I'm going to be tapped out of power. But I've already secured 5 other locations. 2 of them are data centers. 2 of them are more warehouse driven that we will control. Our power is in line for profitability, less than what we pay here. And then we're having conversations with the power companies, a couple that we've already had where they're willing to reduce the kilowatt hours based on commitments. And that's a whole another component that I've learned about demand, being consistent demand buying power. And that's what our power bill is. It's always on. There's no peaks and valleys like your home. So there's so many nuances and back end of this. It's crazy.
And is there any path where you get big enough that you try to generate your own power, whether it be a solar array, or is that even on the table? Can you get enough power from something like that versus the investment?
We signed a letter of intent with a group that is taking over an old power plant. I won't say where in Florida, but we've toured it. We've been there. I spent 4 months on it. It used to produce 300 megawatt of power. It's a $30 million deal. We're not putting the CapEx into it, but the group is. We've signed a letter of intent to be the managing partner of that facility. It's a big deal for us. We haven't announced how that function is going to work, but we know how the deal structure is. They came down, saw our facilities. They're a venture capital group out of Chicago and said, listen, we've got the money. And so they bought the power plant. It's going online. We've met with TECO. We've met with Duke Power. There's also natural gas on the land. We will be in that space. And I've been out to Texas where some other people are doing similar stuff, but the bigger play for us, 100%, if we want to really scale, is going to be in that realm.
And so just to be clear, they bought a power plant just to power crypto mining.
Correct, 100%.
And because you've had that success operating it, they brought you in as a managing partner. That's pretty cool.
That's correct. It came out of left field. It came from the previous article that I had sent you.
Yeah.
They saw that and said, "We'll come down and see if you're for real." I showed them the revenues that we generated on a couple thousand machines.
Right.
We don't have that many running at the time. We still have, about 500 machines running self-internally, smaller compared to bigger operations. But the mechanics are, I want to set up pods. So if a data center has some space and power and they're okay with it, on the GPU side, I was at another data center this morning before this, where they have a couple megawatts of power and they're just sitting on power and space, and they now want to entertain because they need to generate revenue.
Right. And that kind of segues my next question. So what's the risk factor for you as far as the market overheating, in that the cards just get so expensive. The more people get into it, the less, the more competition there is to actually get the rewards when you mine. Therefore, the returns may be less. So you have the potential for decreasing rewards, increasing capital costs. Power moving in there. Is that a concern that putting a big investment in and the market gets so hot that it becomes unprofitable as a long term? I guess it will correct her, but what are your sort of thoughts on that in the next couple of years?
Right now, I'm not looking to spend our internal money on building out huge megawatt facilities. If someone wants to have us come on board and to pass it through. So, for example, a company that we're working with out of China is willing to, we've scouted the location. They are willing to pay for the initial cost build out. And I have to protect our exposure. I've already done this twice now, where we put in millions of dollars to wait for it to come back home. Will it say that we won't do it again? I'm not certain yet, because we've already done the risk now over 5 years. I'm not retired from cryptocurrency world. Could I be? What really is retired at that point? I'm still very hungry in my mid 40s to see this grow, because I believe in the technology before money. We don't love money, but we're not driven on the only sake of money. We want to be environmentally sound if we can. We want to create off a platform that makes sense. So we're creating some automation tools. We want to help people use the blockchain technology. We're looking into blockchain technology to make our voting systems better with some technology we're doing. We're trying to build off centralized systems that make sense. And that's why we're heavy on BTC or the Ethereum background. The platform itself has some real utilization, and we're working on some other projects too. So it's not just the mining, but we're seeing how the mining works, because we're using the mining for the data also to build off some of these other businesses that we're working on. And I just know that you've seen what's happened in South America with Bitcoin being used, and Mayor Castro, right? She said accepting Bitcoin, and the mayor of Miami's heavily investing. Bitcoin's here to stay. The nice thing about some of these other devices that you can mine and get the rewards in Bitcoin and mine other alt currencies. And that's what's kind of unique. And so I think that mining is going to have a part. And then you have the validation network, which is a whole nother conversation of things, and these nodes on the network that have real transaction volume. So our traditional hosting is growing because we're hosting traditional nodes for validation. It has nothing to do with our mining facility. And that's taken us on a whole nother level, just hosting these. And Amazon and some of the other bigger players, the AUP for those, they don't want to host certain components that's what's considered mining. They kick you off the network. So there's a lot of security things and other pieces to hosting that is just such a wide landscape. But in the crux of just the basics, Ethereum, BTC, and then you can mine some other coins. There is like you mentioned, you're going to get priced out with the equipment, but the equipment is maintaining its price right now because people can't find many places to land the equipment, so they're not raising the price right now on the equipment. There's a colo problem because of power, and I think out west, which I'm already seeing, a lot of places, Montana and Washington, where they were the cheapest power for a long time. They're getting smarter, the municipalities there, and raising their power costs. I think it's going to correct itself. Upstate New York, the taxes and some of the things that they're doing with power costs there. Everyone wants their fair share, which is fine. But I think that the people are going to have to get realistic of paying 4 or 5 cents, 6 cents for power with no infrastructure cost. Those days, I believe, are over.
Right.
Or coming, or will come to an end over time.
I think, and I guess at the end of the day, it all that shifts to the demand structure. So the people that'll come in, and we think of it, the traditional profitability of mining, it'll come away from just that straight ROI. It'll be people who need them for their projects. It'll be people that need them to put capital to work in a certain space. It'll be people who maybe are a little bit, willing to take a big risk on appreciation in the future, and all of those things that would traditionally, the numbers may not work now, but all those other factors now means the flywheel keeps turning on demand, which further kind of squeezes the profitability of traditional hosting. Is that fair?
Yeah, it does. And in the depreciation of the machine sitting, if you're not powering them up and they're not online, just the depreciating factor of a device, So the customers that we've got about 75 mining clients, maybe more, all share a very similar mindset to us. Some are small, some are big. We have one whale. They realize, get the machines up. We'll deal with the profitabilities. We just want to mine for appreciation. We have a fair share of clients that email in and ask for request of quotes. We don't fit their world. They think that we're crazy for charging what we're doing, but I'm just wanting to cover a little bit of power and then a colo. I mean, I spent millions of dollars in infrastructure. I invite anybody to go do the same, take the risk. And so I find it ironic when a customer tells me, hey, your pricing's too high. Well, did you spend the money for infrastructure that I have? Where are you going to find it? So they go and they look, and then they'll come back. And there's a lot of that back and forth. I wish my power was cheaper, but I also, in older in my career, I don't want to be traveling around the world to find locations and power. I want to keep things in kind of a route. But then I said that, and I was in Durham yesterday, and we secured a facility there. My scout was in Indiana today, South Bend, and found a 10 megawatt industrial facility sitting there. No one really, I guess, wants to be in South Bend. I don't know, but the facility is just sitting there. And so he says, I'll move to South Bend. I'll run the facility. Power's there. All I have to do is plug and play. I can just looking for the right locations. So there's just the time is now for sure. And I believe that it will do what it did last time. It will influx, fall, people will scatter, remove from the industry. I think it's going to have a lot more sustainability than it did the last time, because there was a lot of data centers that got really hurt from mining the equipment the first go around. Well, I tell my data center partners that I do speak with, let's take deposits first, last, just like you're moving into a home that you're buying or leasing or rent. It's you gotta pay. Nothing's for free. And so I want to make sure that people are fair and everyone wins. But that's kind of the process that we're taking, if that makes sense. And we're very flexible. I flew out 2 weeks ago to a guy who has a farm, has his own machines up in a warehouse. And he simply just called because he wanted advice. And I went out there because I was interested to hear how he was handling. He was talking about solar and some of the things that you're mentioning, renewable energy pieces. We're just kind of figuring some of that out too. But just haven't been able to tap into really sourcing the right renewable energies that can power up these machines.
I've enjoyed the conversation. I've learned a ton, and I think it's great how you've paid your dues, you've pivoted, you've been, you just have been very resilient, and you're reaping the rewards of that. Mitigated your risk in a lot of different ways, and you continue to do so. So I think it sounds like a really fun journey. I would encourage you to get out and travel some more and go find those power sources in far off exotic lands, because that can be fun. But Russ Bruno, I hope we can continue the conversation. I'd love to come check out when you get the power plant online, just to see a power plant turned on for crypto and the facility that's attached to that. Maybe we'll take the camera off the tripod and carry it over there and have a look at it once you get rolling.
I'll take you to lunch to come to Tampa, and anytime you just want to see what we've got going, because it's a plethora. And if you've got, right now we're taking on technology interns, University of Tampa, Pinellas County Institute sent over technicians, USF. They've been sending us folks from their IT departments and stuff just to learn and see what we're doing, and maybe come up with creative ways for, nonprofit, get a machine and make money raising it. Remember back in the day, they sold M&Ms and candy and books or magazines door to door. I don't see this being any different, figuring it out. And so we're doing one of that right now, raising money for a group with a machine, and we're going to get credit at the end of the year for charity. And we're doing that kind of thing. It's kind of a different approach, using some older gear, and whatever it makes, they get. I think last month it made, I don't know, $90. Well, it's $90 that they didn't have, So there's a lot of ways to take this. You just got to be really creative, and you got to be really honest with people, because that's what I would say leaving this is that I've heard from customers, hey, I sent machines to so-and-so, looked them up online, looked great. They sent me a picture of the facility, and it was a guy in a garage with a rack. There's been a lot of that cash grabbing thing, and we're real. We've got facilities where people can come see them. They are secure, but they can come see their equipment. We're kind of an open book in that sense. And when we learn, the customers learn too. This is evolving so quickly. It's I just don't know the 100% path, but I know the path so far is just really being honest with our customers, staying true to it. But I will tell you that I love the internet. It's done great for me. This is an internet play. And I think that this path with crypto, it works. It 100% works. I can 100% say it will pay. You can see it work. You have access to things. So I love it. I really do.
That's great. Cool. Thanks so much. I've enjoyed the conversation. Russ Bruno, Ace host, amongst other things. Thanks for sharing the story of the journey thus far, and we'll keep watching.
Thanks, Joe. I appreciate your time.